Thank you for joining our second episode of ETFs Unwrapped, a guide for asset managers, COOs, and operational leaders looking at launching ETFs in Europe. I am Jeffrey Backish, Global Head of ETF Solutions at BNP Paribas Security Services business, and I will be your guide throughout this journey. Today we are going to focus on the two main ETF domiciles for Europe, Ireland and Luxembourg. Both domiciles have seen great growth in recent years. Together, they make up a vast majority of the ETFs in Europe. But what are the recent developments and advantages of setting up ETFs in these two domiciles? If you're considering either or both domiciles for your ETF range, what are the recent changes that will affect your decision and the future changes we might see? I am really excited to be joined today by experts from both countries. First is Shani Venin, Head of Institutional Investors Client Line from our Luxembourg office. Shani, can you tell us a bit about your background?
Thank you, Jeff, for having me today. I'm really pleased to be here and to discuss the importance of ETF and Luxembourg. So just to give you a bit of background, I started my journey at Security Services 25 years ago in Luxembourg before moving to our headquarters in Paris. Over the years, I've held various roles ranging from product development to business development, always with a focus on the global funds and asset managers industry. In late 2021, I returned to Luxembourg, where I now lead the client lines. So basically, my role is essentially to ensure we deliver the right products to the market to support sustainable business growth.
Thanks, Shani. I've worked with Shani for many years, and I'm always impressed by the wide range of your knowledge and experience. Speaking of impressive, we also have another fantastic guest with us today, Ian Keller, EMEA Fund Solutions Manager from our Dublin office. Ian, can you tell us a bit about yourself?
Sure, Jeff. And thank you for the introduction. It's obviously not very easy to follow Shani, but maybe I should have gone first on this podcast, but I'll give it a go. As you said, Jeff, I'm based in our Dublin office. I've been with BNP Paribas for just over 10 years now. I started off in our fund administration department, primarily working with our alternatives clients. From there, I moved into our business implementation team, and that was a really fantastic experience. It gave me a real broad exposure to a lot of the core security services activities. And then this led me then to focus on a more of a product role. And that's where I am now, I guess, supporting our clients within the asset owner and the asset manager client line. And this includes a number of ETF managers. So really excited to be here today to talk about ETFs.
Thank you, Ian. I love the energy, which is a good transition because there is so much energy around ETFs in Europe today. With Ireland being the largest domicile and Luxembourg having strong momentum as the second largest domicile. Ian, can you give the audience some background on how Ireland got to this point?
Absolutely, Jeff. And it's great to get the opportunity to speak about an Irish success story on the global stage. So I guess, as you know, Jeff, the global ETF market has seen tremendous growth in recent years, record numbers of inflows and AUM. And Europe has played a key role in driving this growth, with AUM now standing at over $2.1 trillion US. And remarkably, Ireland domicile ETFs account for over 70% of these assets. So in terms of your question, if I was to list some of the main factors that have contributed to this position, I would say, firstly, a strong regulatory framework. So the Central Bank of Ireland, or the CBI as it's known, is the regulator of investment funds in Ireland, and it would be very well regarded globally in terms of investor protection. Secondly, I would make reference to the ease of cross-border distribution. So the UCITS passport, which I think a lot of our listeners would be familiar with, this allows a fund authorised in Ireland to be distributed in other EU member states without the need for any additional authorisation in those other jurisdictions. Thirdly, I would say the knowledge and expertise within the ETF ecosystem in Ireland. And by that, I mean the law firms, the advisors, mancos, custodians, administrators. There really is a very strong support network for managers looking to enter the Irish market. One additional key factor that I guess has cemented Ireland's position at the head of the European ETF market is the competitive advantage that we have gained, I guess, through the double tax treaty that Ireland has with the United States. So this means that withholding tax on US equity income is only 15% for ETFs domiciled in Ireland versus a standard 30% in other European domiciles. So if we were to take an S&P 500 ETF as a working example, for every 1% of dividend yield on the S&P 500, an Irish ETF would benefit from an annual tax saving of 15 basis points. And given US equity-based ETFs remain a major strategic focus for investment managers, you can see clearly why Ireland continues to attract such large ETF inflows.
Well said, Ian. So Shani, can you elaborate on the Luxembourg market and why you think it has such strong momentum?
Yes, sure. So of course, Ireland has a predominance in the ETF market in Europe today, but Luxembourg has really become a major player over time. As of June 2024, and according to Leaper Alpha Insight, Luxembourg held over 300 billion of assets. That's about 18% of the European ETF market share. In terms of funds, there were over 1,400 EU domiciled ETF listed on the Luxembourg Stock Exchange, reflecting the country's robust infrastructure and appeal as a fund domicile. But what's really interesting is how Luxembourg is positioning itself for the new wave of growth, and especially in the active ETF. So recent regulatory changes are designed to offer more flexibility to managers, particularly those concerned about transparency and protecting proprietary strategies. One standout feature is Luxembourg's support for ETF share class within existing mutual funds. It may sound technical, but this is a game changer as it lets asset managers offer both traditional mutual funds and ETF shares classes under the same fund umbrella, giving them the operational efficiency and a quicker time to market that they need. And on the top of that, there is a new tax incentives kicking in from 2025. Active ETFs are now exempt from the annual subscription tax, which reduce their costs, obviously. So overall, Luxembourg is clearly positioning itself not just as a follower, but as a driver of ETF innovation in Europe.
Thank you, Shani, for mentioning active, because I believe this can be a shift in terms of which asset managers are looking for ETFs. Shani, you are leading an initiative on hybrid funds inside of BNP Paribas. One area that you are looking at is private assets being held inside of classic fund distribution vehicles. In the United States, we have just seen a somewhat rocky launch of PRIV, which is an ETF holding a portion of the portfolio in private credit. A lot of people in the market are paying close attention to this as a litmus test for the injury. We have also seen the success of a CLO ETF. Shani, given the attractiveness of Luxembourg for private capital, can you see the potential for these types of ETFs in the Luxembourg domicile in the future?
Yes, so maybe let me just mention this democratization of private asset trend that we have in Luxembourg at the moment. So this is not a new trend, but this is a trend which is accelerating in the fund industry, meaning that we have private capital investment strategies that are now targeting a broader range of investors, such as private banking clients or wealth managers. This trend is supported by the recent regulatory developments, such as LTIF in Europe, and financial centers such as Luxembourg are promoting them very strongly. Retailization of private assets, it's really aiming to offer investors more opportunities for portfolio diversification while raising new capital to invest in non-listed company infrastructure, real estate, etc. So in order to address the distribution of private asset strategies to a larger scope of investors, specific investment fund products and structures are considered. So portfolio of private asset investment along with traditional and more liquid illiquid assets scope to the liquidity requirements. The distribution of private capital investment strategy through open-ended investment funds vehicles. So that really the two aspects that we're seeing. And these arrangements differ from the standard operating models that we know, and it creates hybrid funds models using both features of private assets and the traditional world. We have several asset manager clients who are already engaged in these trends or are planning to engage into it. And there are asset managers from both traditional space and private capital space. So definitely we can anticipate interest in bridging the liquidity and accessibility of ETFs with more illiquid asset classes like the private capital ones. And of course, there are still technical, regulatory, and structural challenges to overcome. But Luxembourg, with its strong role in fund innovation and infrastructure, is well positioned to lead in this space.
Those are great points, Shani. If we shift gears, Ian, to look at what the CBI has on its roadmap for ETFs.
Yeah, sure, Jeff. It's actually very interesting because traditionally the CBI has displayed a strict adherence to the ESMA ETF rule, but we're definitely seeing signs of a more flexible approach as the ETF industry evolves. A good example of this would be the recent changes that have been announced to the share class naming convention rules. So previously, if a manager had an existing mutual fund and wanted to launch an ETF share class, then the registered name of the fund had to be changed to include ETF in the fund name. However, it is now acceptable to have the ETF identifier at the share class level, and this aligns with other jurisdictions such as Luxembourg. Another key focus for the CBI has been the subject of transparency and the disclosure of portfolio holdings by ETF managers. Until now, it had been mandatory for managers operating an Irish domicile ETF to disclose their portfolio holdings on a daily basis. There has been a push from investment managers to relax this stance for active ETFs in particular, with Luxembourg allowing for a monthly disclosure. The CBI has engaged with the industry on this matter, and as of April 2025, it has formally updated its UCITS Q&As to allow for periodic disclosure of holdings under certain conditions. There is still a requirement to provide daily information to both authorised participants and market makers in order to facilitate arbitrage, but that doesn't necessarily mean full portfolio holdings. The full portfolio holdings disclosure is now only required on a quarterly basis. One key item to add here is that this rule applies to both active and passive products, so it'll be very interesting to see how this plays out in the market in Ireland in the coming months. And finally, I would just like to highlight the recent Dear Chair letter that was issued by the CBI. So they held a review last year of the primary and secondary market trading arrangements of Irish ETFs. So the review highlighted a couple of points and really focused on the inadequate due diligence and ongoing monitoring by the mancos of their authorised participants and their market makers. And similarly, it noted a lack of oversight at board level. So these are going to be areas the CBI will expect to see addressed in 2025 in order to enhance the risk framework of the ETFs that are authorised in Ireland.
Well said, Ian. From my perspective as a non-EU resident, this is where BNP Paribas can help provide guidance and expertise on how to navigate the market landscape. Shani, can you explain how we can help a client launch an ETF?
Sure. So we have a strong base of asset managers with well-established funds and a strong distribution network already. And more and more, they want to engage into a conversation with us to understand how ETF market is working and what maybe are the key areas they should look at. So typically, they will come to us with some really basic questions where we are really happy to engage with them. For example, they would ask what's the difference between an active ETF and a traditional funds. They would ask us what are the regulatory requirements to launch an active ETF, how does liquidity work in an ETF, or what's the role of a market maker. That's the type of questions they would ask us. sometimes they would even want to understand a bit more about how to distribute an ETF and how they would target investors, or what the challenges they would be having. So that's the type of also areas where we do not always have the answer, but we have happy to share with them what we see, what we heard, what we also when we have also the answer sometimes from our global markets colleague. So that's typically the learning curve we are going through our clients, which are well-established active managers.
Thanks, Shani. And those questions the clients are asking you are topics we are going to be speaking about in our future episodes. So it's a great plug for our podcast. Ian, can you give a recent example of how we have helped a client launch an ETF in Ireland?
Sure, Jeff. I would like to echo, though, what Shani said in her piece there, because in Ireland we're seeing the same questions being raised by our clients, and we're seeing new entrants to the ETF space. So your traditional asset managers are really looking for a steer as to, how do we launch an ETF? To your question, Jeff, about how we have helped our clients in Ireland with the launch of an ETF, in the last couple of years, we have worked very closely with a large asset manager already operating a UCITS fund range in Ireland. They wanted to introduce ETFs as part of their broader product offering and decided to launch a number of ETF sub-funds within an existing UCITS umbrella. Now, the ETF space was new to our client, so it was really important that we were able to guide and support them through the nuances of operating an ETF. So we were initially able to connect them with the ETF ecosystem in Ireland, which I referenced previously, and that was really important because all stakeholders with an ETF launch need to work very closely together. In addition, we steered them through the ICSD share issuance model in Ireland, which is probably the main difference to mutual funds from an asset servicing perspective. And also we were able to leverage our integrated bank model with our colleagues in BNP Paribas Global Markets, who acted as swap counterparty, authorized participant and market maker for these ETFs. So the fact we could provide such a coordinated end-to-end implementation was really well received by our client. And it's great. They've gone from strength to strength now with over 15 ETF sub-funds currently live within their umbrella and more on the pipeline. So it's really exciting for them and really exciting for BNP Paribas in Ireland as well.
I think you both eloquently stated how BNP Paribas can help our clients with ETFs. I really appreciate you both taking the time to come here today.
Great. Thanks, Jeff.
Yeah, thanks to you, Jeff.
Excellent. Watch this space for more episodes where we will be getting into more detail on how and where to operate your ETFs and bring on some more exciting guests. Thank you.
Information contained within this recording is believed to be reliable, but BNP Paribas does not warrant its completeness or accuracy. Opinions and estimates contained herein constitute BNP Paribas' judgment and are subject to change without notice. BNP Paribas and its subsidiaries shall not be liable for any errors, omissions, or opinions contained within this recording. This material is not intended as an offer or solicitation for the purchase or sale of any financial instrument. For the avoidance of doubt, any information contained within this recording will not form an agreement between parties. Additional information is available on request.